Welcome back, everybody. Today, I want to take a little bit of a more laid-back approach to this video and go over the comments and questions from one of my most popular videos, 401k Company Matching Explained. As I sit here recording, this video has had over 55,000 views, and there's been a really good number of good questions in the comments. So I just want to go through a few of those and answer them on screen. And just before I get into the questions, I do want to take just a moment and say thank you to all the people who left such positive comments and feedback on the video. Actually, more than half the comments on the video were just thank yous and positive affirmations and thanks bro and good job and great video and stuff like that. So for everyone that took the time to write a comment and just say thank you, I do appreciate that, and I thank you very much for your support. All right, well, let's go ahead and get into these questions and comments. First question here is from Austin Lamb 2498. Just to get it straight, by using the example in the video, the annual income is $60,000 and 6% of it is $3,600. So this $3,600 is your annual contribution, right? Well, yes, Austin, the annual contribution was $3,600, and in this case, I was showing an example where you would put in $3,600 and your company would also put in $3,600 to get your company match. Next question from Bing Bong 3643. So they can fire you before the year is up and won't have to pay out? Bing Bong, I'm going to assume that you are talking about vesting schedules. And the unfortunate answer is yes. If you're not at least partially vested with your money, then there is the feasibility that the company could fire you before your vesting period hits and you become vested, and you would get none of that company match. Next question is from Brocky. What is a discretionary match policy? Well, Brocky, a discretionary match policy basically means that the company can decide whether or not they want to match your contributions as they said they would at any given point. Most companies are going to uphold the match policy that they set in place, but they do reserve the right to stop matching at any point that they choose. Next question is from Katherine Chan 4154. Do we get taxed on employer contributions? I have a generous employer who is contributing a large amount and have an option for a Roth 401k versus a traditional 401k. I can't find a clear answer to choose the best answer. Well, Catherine, the simple answer is yes. You will have to pay taxes on employer contributions. Something I'm not sure I actually covered in the original video is that all employer contributions are set aside in a traditional 401k, even if you are putting into a Roth 401k. So at the end of the day, when you turn 59 and a half and hopefully retire, and you start withdrawing money from that traditional 401k that your employers have been putting money into, you will have to pay taxes on those funds. Next question is from Corey France 5942. Hi, so I am new to learning about 401ks, but I wanted to know how much I should invest if my company matches 100% of my contributions that are not in excess of 3% of my salary, $51,000, plus 50% of the amount of my contributions that exceed 3% but is less than 5% of my salary. Thanks in advance. Well, Corey, unfortunately, I can't tell you how much to invest. That is something that you have to decide for yourself, given your personal situation. But what I can tell you is that if I were in your situation and if I were being offered a 401k match policy similar to this, I would put in at least enough to obtain the full match. Next question is from D. Dennis 2430. So can you put money in the 401k manually, or does it need to come out of your check? Unfortunately, D. Dennis, it needs to come from a payroll deduction. A 401k is not something that you can contribute to manually separately from a company. Next question is from LHP1LJ. My company has a 401k that matches 50% up to a max of $500. Does this mean that if I put in $1,000 of my own money, they match $500 for a total of $1,500? But that's all they will match for the rest of the year? That doesn't seem great in my opinion. Well, LHP, I agree. That doesn't seem great in my opinion either. I've never actually personally seen a match policy that was based on an absolute value and not a percentage of your salary. That seems pretty bad in my opinion, but that's just my opinion. But to answer your question, yes, the way you've written it at least, it does seem that if you put in 1,000, they would also put in 500. That sucks. Sorry. Next question is from GMO709. Question: the rate of return would be based on both the employee contribution and the match, correct? Well, GMO, The simple answer is yes, the rate of return will be based on all the funds that are in the account. Next question is from Gray Fox 82. Question: company offers 6% match on 401k traditional only, but also offers Roth as well. Other financial gurus suggest Roth is the best option. Should I do a 6% on traditional and some percentage on a Roth, or stick with the traditional for now? Well, Gray Fox, I can't tell you what to do in your situation because I don't know your situation. But what I can tell you is that if I were being offered this with the company that I work for, I would be putting in at least 6% into the traditional fund to get the match. And then anything after that would be based on what I could afford and what I wanted to have in retirement. HocusPocus 6017 says, "Great video, man. Thank you. I prefer my money now because I've learned tomorrow's never promised. However, I also believe accounts like this are a thing of the past because savings accounts are a joke. But man, the free money sounds interesting." Well, I appreciate the compliment, Hocus Pocus, but I can't say I agree with you at all. While I do agree that tomorrow is never promised, I do think it's a horrible idea to not plan for tomorrow. Because if you don't plan for tomorrow, you definitely will not have anything tomorrow. Next question is from I Am Maria, I think. What if, ? Company matches employee contributions at 50 cents per dollar up to 6% salary deferral. Well, I Am Maria, that is basically equivalent to a 3% match, but in order to get the full match, you will need to contribute 6% of your salary to obtain it. Next question is from James D413. I respectfully disagree with the funds matching equals a raise analogy. That money isn't available till retirement and is taken back if you aren't vested. Just my 2 cents. Well, James D, you are right. If you're not vested and you leave the company, you lose the money, and it definitely wasn't a raise. But I have to disagree with the idea that the money is not yours just because you have to wait a little while to get it. I admit 59.5 is a pretty good long while to wait, but you'll get there fast enough. Next question is from Jasmine Roos. I don't know how to calculate this. Someone help. Employees can contribute up to 50% of pre-tax eligible earnings. Company will match 100% of the first 3%, and then 50% for the next 2%. Well, Jasmine, maybe the best way to answer this is to draw it out for you. Well, you said that they would do 100% match on the first 3% of your salary, and they would do a 50% match on the next 2% of your salary. So let's say, for example, you make $100K per year, and this is just to make easy numbers. This means that if you put in 3% of that, which is $3,000, your company will also put in $3,000. Okay. Now, on the next 2%, if you put in $2,000, your company will only put in $1,000. Hopefully that made sense. Next question is from Kelly Chin 7855. Is it necessary to contribute if the company is not going to match? Well, Kelly, no, it isn't necessary for you to put money into a 401k. You're not obligated in any sort of way to do so. But I would say that in general, that probably isn't a good decision. You should probably be putting money into a 401k, unless you have some other retirement plan in mind. Next question is from Mantis City. How about if they match 3% and then 2% after the 3%? How do you break that down? Well, it just so happens we just answered that same question for Jasmine Roos, so I'll direct you back a few minutes. Next question is from Mr. Fitbikeko 17. Well, it's not a question. 17% gross over here. Dude, that's incredible. I've never heard of 17% gross matching on a 401k. That's awesome. Congratulations. What company do you work for? Next question is from MSS 7846. Would this be a good idea if I'm not sure I plan to live in the U.S. till retirement? Can I enroll anyway and take the money if I decide to go to my home country? Well, MSS, that is a very tough question, and I am not at all qualified to answer, but I would highly recommend you talk to a certified professional, but I would be asking certain questions if I were to go consult with someone else. One thing I would be wondering is about the tax implications. The U.S. tax code is definitely going to be taxing you on some of the money in your 401k, depending on where it came from, whether or not it's traditional or Roth. There's a lot of reasons you get taxed. But depending on what country you're going from, if you're transferring money from the United States to somewhere else, you might also be taxed on that. or there may be fees associated with that transfer. Something else to consider is the vesting schedule. You didn't mention in your comment how long you were planning on staying in the US, but depending on whether or not your company is offering a vesting schedule that fits your needs, at least for the match, it may not be worth it. One more thing I'd be watching out for is the currency exchange rate. So obviously in a lot of cases, the US dollar is valued a lot more than other currencies, but there are situations in which the US dollar is lower. So depending on where you're going, where you're going to live, your money may be worth a lot less once you make the transfer. Next question is from Nate Sandoval 6917. If you reach your max contribution limit in your 401k, would you be able to contribute an additional $6,000 in your IRA? Well, Nate, the simple answer is yes. The contribution limits on a 401k are completely separate from the contribution limits on an IRA, so go for it. Next question is from Nick Hartman 6218. Do you know how much the IRS limit is as of 2021? I looked it up and I'm not getting anything. Well, Nate, you can always find this information on the IRS website. I'll put a link to it down below in the description. It's no longer 2021, but we are in 2024, and the current limit on 401k contributions is $23,000 per year. Next question is from Olivier. I think that's it. Olivier 9772. When can an employer deduct the matching contribution on their tax return if the vesting is 6 years after the employer match? So Olivier, if that's how you say your name, that's a great question from the employer standpoint, and it's a good one. So employers are able to deduct 401k contributions that they make into 401k plans regardless of vesting schedules. So basically in the year that they make the contribution, they can make those deductions on their tax return. So I guess the next obvious question is, what happens if the employee leaves early from a tax perspective? Well, there's a lot of different ways of handling this, but typically what companies do is something called a clawback. And it allows them to basically reclaim the money, but it stays within their 401k plan, which basically just means that when other employees contribute to their 401k, they can use that little bucket of money to fund those contributions and not have to make further contributions to the plan. They don't typically have to do any weird tax stuff to undo the deduction. Next question is from RRT401. What does it mean if the employer says they match contributions at 100% of the first 2% pay of contributed? Well, RRT, I'm not sure if that verbiage came exactly from your policy. It is worded a bit strangely, but I do interpret that as to be just a normal company match policy based on 2% of your salary. So if you put in 2% of your salary, they will match that same money. Next question is from Sergio Montanu, and I apologize if I butchered your name. Is there a minimum the employer must match? Well, unfortunately, the answer is in the United States, no. The employer is not required to put any sort of match. In fact, the employer is not even required by law to have a 401k. So if your employer does have a 401k, and if they do have a match, and if they do have a good vesting program, consider yourself lucky. Next question is from Shane Milhone 2761. I was reading through our company's 401k vesting plan, and my company does match, but there's a 6% gross management fee per quarter. Is it still worth it to invest in the 401k? Well, Shane, again, I can't advise you directly, but that sounds horrible. 6% gross management fee per quarter is... boy, they're taking away a lot of your growth. I can't say I'd be too happy about that. Most management fees that you see with a 401k typically range between 0 and 1% annual. 6% is just theft. That sucks, dude. Sorry. Next question is from Silver Honda 0767. I don't understand why the company match is called free money. After all, you have to pay taxes on the company match when you're ready to withdraw it after retirement. That's a fair point. I accept that criticism. It's not really free money. You do have to pay taxes. Next question is from SkyEgg 4462. How is it different to say 50% up to 6% instead of just saying 3%? Well, mathematically, if you put in the full 6% to get the full match, there really is no difference. Companies that do this would typically tell you that they're doing it to incentivize you to invest in your retirement to take care of yourself. And I'll admit I don't wholeheartedly agree with the idea of a company trying to incentivize me about how to take care of myself, but that is what happens. Sletty01 says, they won't take free money, but have pitchforks in hand wanting to tax the rich. Is that a question? I don't really understand. THComedy _ says, he's handsome. Well, thank you. I appreciate that. The Gray Area 2225 says, sorry, can you explain this to me? This is from a possible employer. Less than 5 years of service equals 100% match on the first 4% deferred, 50% match on the next 4%. More than 5 years of service equals 100% match on the first 5% deferred, 50% match on the next 5%. Well, the Gray Area, and I apologize that I need to look at the comment for this one, it's a bit complex. Basically what they're trying to do here is reward you for years of service. So you have one matching scheme for your first 5 years of service and a different matching scheme for your time after 5 years of service. So in the first 5 years, you get 100% on the first 4% of your salary that you put in, and you get a 50% match on the next 4% that you put in. So let's assume in your first 5 years of service that you have a $100,000 salary and you put in $4,000. That means they will match $4,000. If you put in another $4,000, they're only going to put in another $2,000. So you will have put in $8,000, they will have put in $6,000. After your first 5 years of service, if you make it that long, you can put in up to $5,000 and they will match $5,000. And then after that, you can put another $5,000 in and they will only put in $2,500. Hopefully that makes sense. Tmore123 says, a fellow Harry Potter fan I see. Well, Tmore123, yes, I am a Harry Potter fan. I grew up reading these books, but I have to admit that these days I've grown past Harry Potter and I'm a huge fan of the Cosmere universe by Brandon Sanderson. Next question is from WexSam Vid Cool. What it means 100% of the first 3% and 50% of the next 2%. What is my 2% here? Well, I've covered a couple of examples like this already, but let's say that you make $100,000 per year for easy math. You put in 3%, which is $3,000. They will match 3% and put in another $3,000. After that, if you put in $2,000, they will only put in $1,000. Next question is from William Davenport II, 764. You think your taxes will be lower or higher when you're age 59 and a half? You have kids when you are younger. Well, William, it could really go either way, and that's really why I refrain from giving specific advice to specific people, because it depends on your individual situation. Some people will pay higher taxes when they're younger because they will be in a higher tax bracket and they'll have less expenses when they get older. Other people, it will be the reverse. So depending on where you think you're going to be, a traditional 401k might be better than a Roth. It just depends on your situation. YinOK6QP says, hello, my prospective company says 401k 6% match, 100% vesting. Does that mean they're going to contribute 100% of my 6% contribution? Thanks in advance. Yes, that's exactly what that means. If you put in 6%, they will also put in that same amount into your 401k. Yodatoy 8218 says, my company offers 6%, but I'm only putting in 3%. Does that mean I won't get the match, or they will match me 3%? Well, Yodatoy, if they are offering you a 6% match and you're only putting in 3% of your salary, that means they're only going to match 3% of your salary. You are leaving money on the table by not putting in an additional 3% to get another 3% match. Zack Patton says, hi there, are you a UH alum? By the way, great video, thank you. Well, you're welcome, and thank you for the compliment. And yes, I am a University of Houston alum. I graduated as a chemical engineer in 2011. Last question is from Zetsu0411. Two-parter. Number one, how does this work from the company's end? Do they write off the employees' 401ks and match as deductions? I'll answer that one first. So yes, from the company side, any money that the company puts into the 401k program as a match to an employee's contribution is money that they are able to deduct from their taxes. Number two, why doesn't the US government just allow us to contribute without an employer involved at higher limits? Muhammad. Well, Muhammad, I don't know the answer to that question. My guess is, much like anything else when it comes to the government, somebody is probably benefiting from us not being able to do that. Well, that about wraps it up. If you enjoyed this format, leave me a comment down below and let me know. This is the first time I've ever done a Q&A style video, and it'll be interesting to see if you guys like it. Thank you, everyone. Appreciate it.